What is wealth? That's the topic of today's video. And in this video, I want to go over what it takes to live comfortably and how much or how many assets it takes to get from point A to B to live on that FIRE income. In today's video, I want to discuss how many rental units and or how much stock portfolio it would take to live on an income of $75,000 a year in the state of Iowa. You may be asking yourself why I chose 75,000. Well, according to 2025 statistics, 75,000 is the average income in the Des Moines metro area. With that being said, how many units does it take in rentals in order to sustain on $75,000 a year? This is where the term wealth comes in. If you were not to work, how much would you need to live your current lifestyle? Breaking these numbers down, the numbers actually kind of fit where I figured they would be. And if you were to figure everything is mortgaged, everything cash flows, so on and so forth, the quick numbers come down to 32 units. It would take you 32 units, all having a net cash flow of $200 a door in order for you to have that $75,000 a year. Now, you may be thinking, wow, all these gurus on TV told me I need 5, 6, 8 units, and I can live comfortably. That is 100% accurate if you don't have a mortgage on said units. However, most people, in order to build a portfolio, are not going to pay 100% cash for every unit that they buy, or it's going to take you forever to stack and buy units. So now the roadmap to get to those 32 units, figuratively, which I would recommend, and I followed this myself, is buying a unit every other year that hits these numbers. Once you hit the 5 to 6 unit mark is when you will actually start seeing the snowball move forward so that you can start accumulating in a much larger mass. Or if you're a fan of leverage, you're always welcome to do an even exchange in a 1031 and sell and buy something of a much larger proponent. That's definitely a conversation for another day. So just like the stock market, it's taken us roughly 8 years to compound into 5 different units. That's when you'll see the snowball start moving. If you watch the stock market videos, it takes roughly the same 8, if not 10 years to see that snowball start moving for you. Now, once this is all said and done, you should be getting to the point where you can buy at least 1 unit every year after that. So if we fast forward and we're 20 years into this, you should have built a portfolio that covers a $75,000 a year income. Now, throughout this process, obviously, you're going to have some of these units, potentially the very first 1 or 2, already completely paid off, thus increasing your cash flow at either a more rapid pace or allowing you to leverage quicker and quicker to get from point A to B. Either way, you can shave time off of what it takes to get this investment moving. Now, let's switch gears and start talking about the stock market. And remember, my goal is wealth. So I strictly want to talk about a dividend stock versus a growth stock, because growth stock isn't a set it and forget it. You're selling a certain percentage every year with the hopes of the gains every year to offset said sell off. So I want to break this down into a typical 3% dividend stock. And I say typical because that's probably your average for long-term stocks without the growth, so on and so forth. But to get the same 75,000, you will need to accumulate $2.5 million of money into the market in order to have that said return. Now, my question to you would be, how long is it going to take you to put in $2.5 million? Now, you're going to have the compounding and the dividends and the growth, the drip campaigns, so on and so forth throughout the entire process of this. But I'm going to tell you the bulk of people are probably going to take every bit of 30 years to get to the $2.5 million. If you remember, I said it's probably a 20-year journey, potentially quicker, if you wanted to shave time off of building a portfolio to get to said same income. One just so happens to be 100% hands off. The other one is not hands off. The numbers I calculated earlier in the rental side does not include property management. Now, you could get to a point to where property management makes sense, only if the cash flow is there to offset it. So running the numbers through a calculator and generator, you're looking at a 20 to 25 year horizon for a 32 door rental unit portfolio. And again, you can always speed that up. Same with the stock market numbers. Running them through a generator, you're looking somewhere around 33 to 38 years at just investing $5,000 a year. which is going to be probably what the typical person's going to be able to invest moving forward. With those numbers all said and done, at the end of this, in the same time frame, let's say you have the same exact valuation between stocks and real estate. One just allowed you to get to your retirement almost a decade earlier than the other one, but it's actively managed by you. So that's the big piece that I want you to take away from this. You can get from point A to B however you want. You can even mix the two together. It comes down to, what is your time frame? What stress are you willing to take on? And how soon or where are you at within your stage of life to move forward? With all of those things to be considered, and I'm not going to tell you one's safer than the other. I might be in real estate full time. But with all things considered, which one makes more sense to you? And how long do you anticipate to get to what the new term is FIRE, for you to retire and live a life of comfort within your current means? If you've made it this far through the video and you found the information entertaining or at least educational, because that is my goal, I would like you to comment and or like and subscribe. Also, I am not a certified financial planner, so take that with a grain of salt.